Good morning. Welcome to the market opening bell on Friday, May 16th, 2025. Hong Kong stocks retreated on Thursday. The Hang Seng Index opened 3 points higher, briefly climbing 70 points to a high of 23,710 before pulling back. In the afternoon, it fell as much as 268 points to a low of 23,371, closing down 187 points or 0.8% at 23,453. The H-share index dropped 83 points or 1% to 8,509, while the Hang Seng Tech Index fell 83 points or 1.6% to 5,297. Total market turnover for the day was 200.2 billion Hong Kong dollars. Southbound funds recorded a net outflow of 221 million Hong Kong dollars, a shift from the previous day's net inflow of 6.707 billion Hong Kong dollars. Notable transactions included net purchases of China Construction Bank 977 million, China Mobile 666 million, Mop 113 million, and Li Auto 113 million, while net sales included Tencent Holdings $2.36 billion, PopMart for 122 million, SMIC 301 million, and Meituan 241 million. Data shows southbound funds have sold Tencent for 8 consecutive days, totaling 12.352 billion Hong Kong dollars, SMIC for 4 days, totaling 1.842 billion, while buying China Construction Bank for 3 days, totaling 2.317 billion, and China Mobile for 3 days, totaling 1.096 billion. As of May 9th, southbound funds accounted for 21.5% of daily turnover, up from 17.3% last year, 14.1% in 2023, and 11.8% in 2022. Year-to-date, southbound funds recorded a net inflow of 575.5 billion yuan, a 1.89-fold increase from 199.4 billion yuan in the same period last year. April alone saw a net inflow of 157.4 billion yuan, the second highest since the Stock Connect scheme's launch, with the peak in January 2021 at 259.5 billion yuan. BOCI International expects strong demand from mainland investors for Hong Kong stocks, forecasting a net inflow of 1.2 trillion yuan in 2025, up 61.29% from 744 billion yuan last year, driven by quality stocks, attractive valuations, high dividends, and advanced manufacturing sectors. Stock Connect is seen as a key driver for the long-term revaluation of Hong Kong stocks, with mainland investors particularly focused on internet, telecom, semiconductor, and automotive stocks. Technical analysis: the Hang Seng Index has alternated between gains and losses recently, indicating a tug of war at current levels. Resistance remains at 23,900 and 24,500, with support at 23,200 and 22,800. In mainland markets, the Shanghai Composite Index fell below 3,400, closing at 3,380, down 23 points or 0.7%. The Shenzhen Component Index fell 168 points or 1.6% to 10,186. Combined turnover in Shanghai and Shenzhen was 1.1523 trillion yuan, down 164.3 billion yuan from the previous day. The renminbi central parity rate ended its 3-day rise, set at 7.1963 against the US dollar, down 7 pips. In spot markets, the onshore renminbi fluctuated around 7.2, while the offshore renminbi hovered near 7.21. Alibaba reported fiscal fourth quarter revenue ending March 31st, 2025 of 236.4 billion yuan, up 6.6% year-on-year, slightly above expectations of 236.1 billion yuan. Net profit attributable to shareholders surged 2.79 times to 12.382 billion yuan. Under non-GAAP, adjusted profit was 29.847 billion yuan, up 22.2%, but below expectations of 31.029 billion yuan. For the full year ending March 31st, 2025, revenue was 996.347 billion yuan, up 5.9%, but short of the expected 1,000.5 billion yuan. Net profit attributable to shareholders rose 62.36% to 129.47 billion yuan, missing forecast of 134.5 billion yuan. Non-GAAP adjusted profit was 158.122 billion yuan, up 0.41%. Among Alibaba's 6 business segments, the International Digital Commerce Group, AIDC, and Cainiao underperformed market expectations. Earlier this month, Alibaba upgraded Taobao flash purchase and introduced significant subsidies to compete in instant retail. Management noted that Taobao Group's EBITDA may be impacted in the coming quarters, but these investments are expected to drive user growth, engagement, and repurchase rates. Alibaba Cloud's revenue grew 17.7% year-on-year, with AI-related product revenue maintaining triple-digit growth for the 7th consecutive quarter. CEO Eddie Wu stated that strong AI demand is expected to accelerate cloud revenue growth, with a focus on core businesses and AI plus cloud as a new long-term growth engine. NetEase reported first quarter net revenue of nearly 28.83 billion yuan, up 7.4% year-on-year, within the forecast range of 27.772 to 29.522 billion yuan. Net profit attributable to shareholders was 10.3 billion yuan, up nearly 35%, far exceeding expectations of 7.596 to 8.111 billion yuan. Under non-GAAP, net profit was 11.236 billion yuan, up 32%, also surpassing forecast of 8.615 to 9.314 billion yuan. Geely Auto announced first quarter net profit attributable to shareholders of 5.672 billion yuan, up 263.6% from the restated prior year figure. Revenue rose 24.5% to 72.495 billion yuan. First quarter sales reached a record 703,800 vehicles, up 48% year-on-year. New energy vehicle sales surged, with the Galaxy brand growing 214%. Zeekr delivered approximately 114,000 vehicles, up 21.1%, with revenue of 22 billion yuan, up 1%, and net loss narrowing to 763 million yuan from 1.915 billion yuan. CEO Gan Jiayue expressed confidence in meeting or exceeding the full-year sales target of 2.71 million vehicles, with Q1 sales of 703,800 vehicles, representing about 26% of the goal. Green Tea Group, which debuted today, closed at 6.64 Hong Kong dollars in Phillips Grey Market, down 7.6% or 0.55 Hong Kong dollars from its IPO price. Excluding fees, a 400 share lot would result in a paper loss of 220 Hong Kong dollars. US stocks show mixed performance on Thursday. The Dow Jones Industrial Average, after dropping as much as 273 points, rebounded to close up 271 points or 0.7% at 42,322. The Nasdaq fell 34 points or 0.2% to 19,112. The S&P 500 rose 24 points or 0.4% to 5,916. The China Dragon Index, reflecting Chinese stocks, dropped 178 points, or 2.4% to 7,351. Alibaba stock plummeted 7.8%, while NetEase surged 14.6%. United Health reportedly faced a medical insurance fraud investigation, causing its stock to fall as much as 19% before closing down 10.9%, making it the worst performing Dow component. Cisco beat quarterly expectations with its stock rising 4.85%, the best performing Dow component. Several major tech stocks declined. Amazon fell 2.4%, Tesla 1.4%, Apple 0.5%, and Nvidia 0.4%. Coinbase, a cryptocurrency trading platform, reportedly faced an SEC investigation for inflating user numbers, leading to a 7.2% drop in its stock. Foot Locker saw 85.7% after being acquired by competitor Dick's Sporting Goods for $2.4 billion US. Federal Reserve Chair Powell stated Thursday that long-term interest rates may rise as economic conditions and policies evolve, with real interest rates potentially reflecting more volatile future inflation compared to the period between the two crises in the 2010s. He added that the US may enter an era of more frequent and prolonged supply shocks, posing challenges for the economy and central bank. Economic data showed the U.S. April Producer Price Index (PPI) fell 0.5% month-over-month, missing market expectations of a 0.2% increase, marking the first decline since October 2023 and the largest since April 2020, driven by its 0.7% drop in service costs. April retail sales rose 0.1% month-over-month, beating expectations of no change, following an upwardly revised 1.7% increase in March. Initial jobless claims for the week ending May 10th remained steady at 229,000, meeting expectations. April industrial production was nearly flat, below the expected 0.2% growth, as manufacturing and mining output fell 0.4% and 0.3% respectively, offsetting a 3.3% rise in utilities. March business inventories rose 0.1% month-over-month, slower than February's 0.2% and below the expected 0.2%, driven by a 0.4% increase in wholesale inventories and a 0.1% rise in manufacturing, while retail inventories fell 0.2% after a 0.1% decline in February. The NAHB Wells Fargo Housing Market Index, reflecting home builder confidence, dropped 6 points to 34 in May, the lowest since November 2023 and below the expected 40. Our stock pick today is Guoquan Food, stock code 2517. Guoquan Food operates primarily in China, focusing on home dining meal products such as ready-to-eat, ready-to-heat, ready-to-cook, and ready-to-prepare foods. Guided by its philosophy of delivering delicious, convenient, and affordable meal solutions, the company continually enhances its product offerings by introducing new items and refining existing ones. In 2024 alone, Guoquan launched 412 new stock-keeping units for hot pot and barbecue products. The company has built an extensive retail network spanning 31 provinces, autonomous regions, and municipalities across China. By December 31st, 2024, Guoquan operated 10,150 stores, with the density of this network improving logistics and transportation efficiency. Its retail stores provide both online and offline shopping options, ensuring broad consumer reach. Fortune primarily employs a franchise business model, with franchise stores managed by regional teams that offer support and guidance to franchisees in market development and operational strategies. To maintain strict control over production and supply, Guoquan adopts a single product, single factory approach. As of December 31st, 2024, the company owned 6 specialized food production facilities: the Heyi factory for beef products, the Wanlai Wanqu factory for meatballs, the Chengming factory for hot pot soup-based products, the Huanghuan factory for seafood, the Daixiaji factory for paste products, and the Taijiang factory for sour soup-based products. For the year ending December 31st, 2024, Guoquan reported total revenue of 6.469 billion yuan, reflecting a 6.2% increase from the previous year. Net profit attributable to shareholders reached 230 million yuan. Revenue from sales to franchisees amounted to 5.445 billion yuan, constituting 86.3% of total revenue, underscoring the franchise model's critical role in driving the company's revenue, market share, and brand recognition. To support franchisees and boost sales, Guoquan has developed multiple online sales channels, including the Guoquan app, a WeChat mini program, third-party delivery platforms, and popular social commerce platforms like Douyin, fostering synergy between offline stores and online channels. The company is also innovating its store formats and upgrading existing locations, refining models for wet markets and enhancing township market stores. In 2024, Guoquan added a net total of 287 township stores, designed with distinct product mixes and layouts to better serve township consumers. Looking ahead, Guoquan is cautiously exploring overseas markets, evaluating potential locations such as Hong Kong and Southeast Asia to export its supply chain capabilities and promote Chinese culinary flavors globally. Recommendation: buy at 2.75 Hong Kong dollars with an initial target price of 3.05 Hong Kong dollars, followed by a secondary target of 3.25 dollars and a stop loss set at 2.60 dollars. I do not hold the above mentioned stocks.